What's up? What's up? What's up? How are you doing, my YouTube followers and also Facebook followers? It's been a while. I analyzed chat for you guys. I've been very, very busy with the people in the community, helping them to be able to gain their expertise and become successful at what they do. How are you doing? I'm super pumped up, super, super excited. Last Saturday, we had a training on crypto that we're able to establish and help people to learn how to start their crypto journey. Now, if you have not started your crypto journey, there is a link on this video below that will allow you to also attend that training free of charge. So it's already recorded so that you can also learn and start. And in that video, I mentioned 10 ways to trade, to take advantage of the crypto space, and also 5 coins that you can put in your money in for the next 5 years, that you can do a lot for yourself. There's a lot in that video, so make sure you click on the link below to register and experience what other people experience free of charge. And you know, this channel is known for the financial market and also digital business, so you don't want to miss out in that space. So let's get back to today's topic. So two things I want to really help us with today, and the first is what is called session time, trading sessions. Okay, trading session. The trading session time is the period that the market, countries come into the market. And the second thing I'm going to be sharing with us is the power of spread. Okay, spread. So let's get started. Now, a lot of retail traders understand the place of trend, okay? But we, the institution traders, apart from trend, we also want to be able to work with certain things that happen around this retracement. Okay, and as an institution trader, you want to also be able to know the sessions that things happen. So if you come to this time frame right now, I have an indicator that separates time, and you look straight into this chart, you will see that the market moves in a particular order. Good. Look at this is New York session. This is New York. Look, this is when the US bank came in, the New York institution traders came in, and the market went up. This is London. This is when the market came in. The institutions in London, they came in. Now, because of where I stay, which is West Africa, I really don't trade in the night, which is the Asian session. So all of these other sessions are Asian sessions. This is Asia sessions. Now, whenever you are trading, the pair you are trading has a lot to do with what you're going to be trading in the market. So for example, if you want to trade London session, you want to focus on the GBP pairs, you want to focus on Euro pairs, and stick to it. If you want to trade USD New York sessions, you want to focus on pairs that takes volume, that takes their strength from the session. So because New York, that's when US pairs will move. You want to trade USDs only in the New York pairs. So what does that mean? It means that once it is around 1:30, 1 o'clock to between 1 and 2, I'm on my system analyzing only the USD pairs and Canadian pairs. And I'm going to be expecting their move. But when it is in the London session, which is from 8 o'clock, I'll be analyzing GBP pairs and Euro pairs. Okay? Now, having established that, I'm going to go to the board and to my screen and share with you what happened today. So I picked out this particular chart, and I established that we are on 4 hours. So I established what is called, I established the 4-hour pair. So on 4 hours, I was able to establish trend, which is my rule of engagement. Okay, I have my Wyckoff theory here. Okay, I have my Wyckoff theory. I have the retracement of the Wyckoff theory. So what am I going to be doing? I'm going to be looking for LPY. Okay, that's the entry, which is a retracement. So you can see that this is a high, this is a low, this is a lower high, and this is a lower low. So that means we have a downward trend, okay? So with this downward trend, it means the only thing I'm going to be doing is that I am going to sell. Okay. So while I prepare to sell, I won't be able to identify my what? My demand, my supply level, because we are selling. So this is the origin of the supply level. That is your peak. And this is your what? This is the institution candle. And also, we have the break of structure here, which is liquidity broken. So they've taken up the liquidity at this level. And because the liquidity has been taken up, that means we're going to be waiting for what? For retracement. So what I did, once we saw this morning, I and the team went to lower time frame, which is 5 minutes. Okay. I'm trying to pull this off. 3, 5 minutes. So 5 minutes. So having gotten that right, this is my area where I'm dealing with. Even on 30 minutes, sorry, let me go back to 4 hours and show you something there. This is the level I'm dealing with. This is the level that I'm dealing with. I'm dealing with this level, and I'm dealing with this level. That's the institution level there. And from here, go to 30 minutes. So on my 30-minute time frame, I also have what is called drop-based rally, drop-based drop, which is a CP, a continuation pattern, drop-based drop. So inside the drop-based drop on 30 minutes, that's where the market went to trigger. And as it triggered this place, it became my area of interest. So I went to where? I went to 5 minutes. Now on 5 minutes, I won't be able to see my Wyckoff rule in my 5 minutes. If you're not seeing this, if we don't see this rather, we are not going to go in, okay? So let's go through the Wyckoff rule together. So I have my preliminary support, which is the first eye. I have my sell ceiling, my buy ceiling, which is the first confirmation move that the market is exhausting. And after that, I have my AR, which is my automatic reaction. And after my automatic reaction, I have, let's go to 1 minute. After my automatic reaction, I have what is called upthrust. Okay, upthrust. And after on my upthrust, I will have what is called sign of weakness. Sign of weakness. Sign of weakness. So once I get my sign of weakness, I need to see another higher high, which we'll call upthrust after distribution. So upthrust after distribution, that is it. So this morning, we have this high, preliminary support, we have BC, we have AR, we have our UT, and we have our sign of strength, sign of weakness. So when I zoom out in this, I will be able, I'll be expecting what is called break of structure. Break of structure. So now I've been able to identify all of this, and I have my first and second phase already on. So I'm on my third phase right now, and I'm expecting the market to come up back into this. So what do? I'm going to go and check out for my last buy to sell candle. So the last buy to sell candle, if you see this buy to sell candle here, so I used 5 minutes. I think we used 5 minutes or 15 minutes on that. Okay. Perfect. So we used this last sell to buy to sell candle, and this was it, the low and the high. Okay. So the low and the high of that. So this morning we had this as our entry point. Okay. And we have this as our stop loss, just above the red candle. So following the 1 minute entry approach, we have altogether about 5 pips stop loss, about 9 pips stop loss this morning. Now, what happened next? We expected the market to retrace back up to this place. And what happened? It shot us by what? By just 1 or 2 pips. It didn't get there. So if I measure between here and here, about 2 pips, it did not get to our entry. So this is one of the reasons why when you are trading and you are going into any trade, respect the what? Respect the spread. So what's the spread? What is a spread? A spread is the difference between buy and sell candle at every point in time, which is the commission of a broker. So with this spread on this trading view is 2 pips, okay? 2 pips you need. So if you're going and you're an institution trader, you must respect that move, so that when you're going in, you want to lessen your entry by 2 pips or 3 pips for your entry. It's very, very important, because even at your stop loss, you want to put in at least 1 pip or 2 pip above your stop loss, because there's a way the market, the institutions, they play around that spread and they hit people out. Okay, so immediately it got to that level, guys, it didn't trigger us. And look at this, the setup. This is the setup before it happened. Okay, this is the setup before it happened. We have our AR, we have our break of structure, we have our UT, we have our UAT, and it came down. And you see, this was captured 8:59. So our trade, basically, because we are trading GBP, we are trading it to go into the London session, and London session starts for 9. Now immediately 9 came, immediately 9 a.m. West African came in. What happened? They pushed the price down as if we were wrong. And what happened again? They took it up further. And as they took it up further, the spread did not allow us to be triggered. And because we're in the London session, right now, this pair are delivered about 90 pips today. About 90 pips. So let's move it a bit less because of that 2 pips loss. That 2 pips difference. So right now, if I'm risking, this is 1 to 8. So that means if I'm risking $10, if I'm risking $10, and I have $5,000, let's say $2,000, and I'm risking 1%, and my stop loss is 10 pips, 10 pips, and I calculate for the pair. So it's telling me to use 0.25. So that means if I'm risking $20 right now, 20 times 8, that's 160. So I've already grown my account by 160, which is already closer to about what? 10% of my account. So this is how you can take one single trade and you can use it to finish the market. And look at where we are going, because we took the trade from 4 hours before we went to 1 minute of entry. We're still expecting it to come as low as what? As low as this place, which is 1 to 15. And because it's a fresh retracement following this move, it could even come lower to what? To about 500 pips. So this is how we rock and roll trading institution trader concepts. So guys, I'm really pumped up. I'm really, really excited. Lives are changing. People are leveraging on this approach and they are doing well for themselves. So please and please, you need to take quality time to study your why call for those who have been following me for a while, you know, and understand how this works. So GBPAUD was a trade that did not trigger us this morning, and it's really, really painful. So before I post this trade, before I post this video, we still have another interesting zone on AUD USD. Okay, so if you're watching it before, now, after now, you can check out AUD USD for another setup. So we're preparing for the New York trade, which is 1 p.m. Okay, 1 p.m. By 1 p.m. we'll come on again to check any setup that will be we're going to be working in for 2 p.m. So you don't need all the time. Okay, guys, you don't need all the time. You don't need all the time to sit on the system and be looking for trade. You don't need all the time. Just make sure you are focused. Just make sure that you understand the concept and harness the trading session, and you're good to go. So please don't put your money when the volume is not in the market. Don't put your volume when you're not in the market. Okay? Thank you so much for being for watching the video. Don't forget to subscribe if this is your first time, so that you will not miss out any opportunity that I have for you guys. Number 2 also is that I also want you to know that this Saturday I'm going to be doing another training on crypto that will allow you to take certain decisions and understand what the big boys are playing with. I'll take care of yourself, guys, and I'll talk to you guys soon. So don't forget to subscribe, and also don't forget to click on the link below to register to watch the previous session of the previous training on the cryptocurrency. More videos will be coming up, guys. I've just been very busy with the people in the community, guys. Have an amazing day, and I'll talk to you guys soon. Now, for a lot of you that have been asking for mentorship, don't forget, all you just need to do is to send me a mail on contact@myowolabi.com, and we're going to be taking it from there. Okay, I'll talk to you guys soon. My name is Mayowa Owolabi. Cheers. Bye for now.